All right, so with NASDAQ, this is extremely important to understand what's happening over here because we will be closing the 3-week candles very, very soon. Tomorrow is the last day for the 3-week candle to close. And first things first, you should be aware that there is a inside 3-week candle pattern in play, which the market is resolving at the moment. And we are not actually seeing further downside where the downside liquidity is being taken out. I was thinking that would be the case because we were printing an inside 2-week candle failure, which was this pattern over here. Now, yes, the market did play out the 2-week candle failure just a little bit, like it took out these two liquidity pools on the downside, but it is actually like reversing right now and it's going higher for now. Does that invalidate this entire pattern? That you're not going to go for this liquidity to the downside and eventually this flat open, because I was under the impression that that is what's going to happen in the market, that it should be going lower and tagging this open inefficiency in the market, but it is not doing that at the moment. What changed? There's a very, very simple reason for that. This thing changed. Where if you use the opens indicator, we've discussed this in live streams multiple times, that this maps out the monthly open, the weekly open, and the daily open if you go on the lower time frames. So you can see that the green levels are daily open, the yellow levels are monthly open, and the red levels are the weekly open. When I say monthly open, I'm not exactly talking about this month's open. I'm also talking about this quarter's open, and I'm also talking about this yearly candles open, which is on the 12-month chart, which makes this level extremely, extremely important. And it is not something which you should take lightly, because this is an important SR level to have on a chart. And when I was mapping out the market going into yesterday, and I saw this reaction happen in real time, where the market basically traded above the yearly open at this level, the first thing which came to my mind was that the local market structure was being broken, where we were printing lower highs with respect to these previous lower highs which were being printed. So when you took out the lower high over here, locally speaking, the market was actually turning bullish. All right. But in order to sustain momentum to the upside, you had to close the daily candle above the previous daily candle's high. And when I was witnessing how the daily candle close would look like, it was clear as a day to me that the market would be closing above the yearly open, which is at 25,233. And if that were to happen, then the entire market structure, which has been in development since this top till this bottom, it would actually start pointing towards bullish momentum to resume to the upside. Now, what exactly do I mean by that? Now, this is the sort of a thing which is better discussed on live stream and not exactly on text format. I try to make a report on text format, but people's attention span is not that great to be reading all the reports which I post. So I'm going to explain it over here. Let's rewind and take the market back over here, when the market was actually trading higher like this. Up until here, the market was actually bullish. I think there's no doubt about it. Like if you were to map out all the higher lows which are being printed, which you can post like this, most will agree that the market has been printing higher lows. So if the market is bullish like this and you want to turn bearish, the only way you can turn bearish is if the market takes out this nearest higher low. All right. And this is exactly what happened over here. When the market came down and I took out this higher low, that was technically a break in market structure. This was supposed to be bearish. Now, if this is bearish and we are going to go lower, then there's no reason for the market to go above the nearest lower highs. Now, where are the nearest lower highs? These are the nearest lower highs, which I'm just mapping out. Okay. Which means that any bounce which happens in the market, it should not go above 25,224. And this resistance zone it should hold as market tries to bounce. But it did not hold. It actually went up and it took out the nearest lower highs. And in doing so, this entire market structure, which was actually turning bearish, then fled back into the bullish territory because it is now breaking market structure by taking out the lower highs and printing new highs in place when it did this. Okay, so this lower high was taken out, this lower high was taken out, this lower high was taken out. Eventually, these highs will also get taken out. Now, what most people somewhat fail to understand is that just because we are taking out the lower highs, it doesn't mean that the market is just going to keep going up in a straight line. And we've seen this thing happen multiple times in the past. That just because the market has been going up in a straight line ever since this bottom, it doesn't mean that this is the natural state of the market. What market generally likes to do, and I'll show this to you through previous trends which have unfolded. If this was the bottom and the market's going to go higher, and even though we did take out the previous all-time high or the nearest lower highs, the market just doesn't go up in a straight line, even though the entire trend is bullish like this, right? What happens is that once you make a push, you make a higher high. There's a pullback. This pullback is a higher low in comparison to the previous low. And then the next trend leg unfolds. It makes a high. Then it does a pullback, which is a higher low with respect to the previous higher low. Then it resumes the trending leg and goes higher until there's a shift in market structure to the bearish side, where the nearest higher low was broken down and the market just went down in a straight vertical spiral. Now, even when it was going down, it wasn't just going down in a straight line. You can see that there were counter trend rallies which were happening as the market went down. So in essence, the market has a tendency to go in wave-like fashion. And this is what it's going to look like. Where you go for the first trending leg, there's a pullback. It makes a higher low. Second trending leg, there's a pullback. Another higher low. Third trending leg, then a pullback. Another higher low. And the market just keeps unfolding like this. This is how market structure generally unfolds. And that is what we were witnessing ever since we took out the nearest lower high. The market was undergoing pullbacks, but while it was undergoing these pullbacks, it was actually maintaining the bullish market structure. And what exactly do I mean by that? If the nearest higher low was taken out, which is over here, then essentially this is technically a higher high with respect to this high. It's not a higher high with respect to the all-time highs, but it is a higher high with respect to this lower high and this lower high over here. Now, when this pullback happened, which is somewhat normal, that as I depicted, that markets have a tendency to do pullbacks and then form higher lows with respect to the major lows which have been printed, this will be a higher low only if and only if this recent lower high or like the new high gets breached to the upside. This is also like another concept which is somewhat misunderstood, that when you are going above from like a level and you do a pullback, this higher low is only confirmed as a higher low when the market trades above the previous high over here. This does not get confirmed as a higher low if this does not go above the previous high over here. Like, let's say if it just goes sideways like this, there's no higher low confirmed at the moment. It could like do it at the stopper to the downside before it goes higher. All right. So that's also something to keep in mind, that just because you are doing a pullback and it's bouncing from this level, it is not a confirmed higher low as long as the market has not traded above this high over here. So when the market trades above this high, this gets confirmed as the most recent higher on the market, which means that in the future, when the market does undergo a pullback, it is absolutely non-negotiable that the market cannot go below this higher low. If it goes below this higher low, then it would be a breach in market structure and the market would be turning bearish. Okay, so using this premise is what I was approaching with the market over here. if the market went through a pullback after taking out this lower high, and we're using this as the most recent high, notice how the market was going sideways. This was not confirmed as a higher low just because it went through this rally. It only gets confirmed as a higher low once this thing happens. When the market sweeps above this previous high over here, this would be confirming this push as a higher high, and this would be confirming this low over here as the most recent higher low. Okay, so far are we clear before I move ahead? And this is exactly what I was posting over here in the Discord channel, where I had mentioned that this is the major low, that's the high, the higher low, higher high, and the pullback which is happening, it has the potential to be a higher low because it is trading within the previous support zone, and as long as it doesn't breach the previous higher low, this could be the new higher low. All right. So that's what I was like posting in the technical analysis channel in terms of how the market structure is evolving and why exactly was I looking at this region to be holding as a support zone moving forward, that is. So when the market went through this pullback and it came into this region over here, that's where you need to be aware that you are very close to a daily support zone. Like it is a legitimate daily support zone. Why is this a daily support zone? Because this was the most recent higher low, which led to this entire rally, which created a higher high, which makes this a legitimate support zone. And in this support zone, as you entered, the market is undergoing a reaction now. And this reaction is creating a support zone, a new support zone on top of the previous support zone, which is this bullish order block. Which is forming right on top of the yearly open, quarterly open, and the monthly open. Okay, that's exactly what I was like discussing yesterday, that it was imperative that the market closes the daily candle above the quarterly open and the monthly open, which it did so. And we're seeing some follow through happen to the upside at the moment. And I think what the market is trying to do right now, it's also trying to confirm a 2-day bullish order block within this previous 2-day bullish engulfing. So once this confirms, this is like a legitimate higher time frame support zone information. We're going into next week. There are certain catalysts which are lined up, and that's also what I'm going to discuss right now. Like first things first, the basics and the technicals are important, like knowing where the market structure is going, how it's shifting, how you should be like approaching the market structure moving forward. That's the first part. Second part is, where exactly is the liquidity flow gonna go? Is it gonna go to the downside? Is it gonna go to the upside? There are certain indications which you can use, which can tell you where the liquidity flow is gonna go. At the moment, what I can just, based on the market structure, I can decipher. We had this major low. This broke market structure by creating high. This is a higher low, a higher high, another higher low information. So if we're getting higher lows and higher highs information, that is bullish market structure in place. And the market is wanting to punch higher because that's what bullish market structures do. They make higher highs and then higher lows. So in this case, I am anticipating that the market will actually keep punching higher and make a new all-time high. And once it makes a new all-time high, then we'll see what happens from there. But that's the clear draw on liquidity for the market. Now, what exactly is holding the market back? Because we've discussed this thing in the past in the weekly outlook stream. Like, there's only one company which is controlling the market. It's not Microsoft. It's not Amazon. It's not NVIDIA. Oh, sorry. NVIDIA is the company which is holding the market cap at the moment. So if you were to compare the market structure for NASDAQ and NVIDIA, they both are pretty much similar. Like, if you see this entire sell-off, it's this sell-off right here. Now, even though other mega cap companies have been getting obliterated, why is NASDAQ not falling down? Because the entire algorithm's weight for NASDAQ has been shifted to NVIDIA. And if NVIDIA is not falling down, NASDAQ is not falling down. And whatever this downside pick did happen, it was because of NVIDIA coming down. like NVIDIA went through this gap down, and that's one of the reasons why we had this gap down over here. If NVIDIA went through this bullish rally, that's what made this bullish rally happen in NASDAQ. So if NVIDIA is the one which is controlling the NASDAQ index, wouldn't it be easier for us to know like what exactly is driving NVIDIA? Like how exactly would NVIDIA behave in the future? Because if we know what NVIDIA is going to do, then we know what NASDAQ is going to do. And then we also know, like, what the entire global risk on appetite is going to do. So I found out that NVIDIA is actually controlled by this company, SoftBank, which is a Japanese company, as they have like a major investment in the AI infrastructure place, right? Like we all have heard about this company, that they were investing like $500 billion in the Stargate project, which is one of the reasons why US stock market is so heavily correlated to the Japanese stock market. And which is also one of the reasons why you would notice that when you compare NASDAQ with Nikkei, like ever since this bottom happened in the market, this entire rally is like an entire carbon copy of what Nikkei is doing. Now at the moment, what I've been witnessing is that Nikkei has actually traded above the previous all-time high, but NASDAQ has not. So why is this thing being held back? The only simple answer I can give you is because of NVIDIA. And what is controlling NVIDIA? It's SoftBank. SoftBank is very tightly correlated to what NVIDIA does. And this correlation has existed for a very long time, where if I were to show you on how SoftBank and NVIDIA's price action unfolds, all right, let's do this. You see this bottom over here, April 2025? It was this bottom over here in NVIDIA. This rally, which happened in NVIDIA, is because SoftBank started rallying. Now, SoftBank really didn't start going until here in May. Not even in May, like I would say July. Once this rally was underwent, like once this rally was happening, notice every pullback which has happened in the market. When SoftBank went through this pullback, NVIDIA flattened out and it was not actually going higher. When SoftBank started rallying higher, that's when NVIDIA broke out too, and it started going higher. See this top over here is this top in SoftBank, exactly the same date, 29th of October. And this was happening because SoftBank mentioned that they are divesting out of NVIDIA and they want to like invest into OpenAI or something like that. Like they want the profits they have made in their NVIDIA's investment, and they want to like rotate those profits into other companies. Now, why am I bringing SoftBank all the way back? Like, even though, it's been like in a downtrend. Because the thing is that if NVIDIA is being controlled by SoftBank, even if they have been divested away from NVIDIA, like you can just compare the price action and be like, yeah, every single movement which is happening in the market, it is because of SoftBank. It's not like NVIDIA is not like acting independently, because money from SoftBank is controlling what NVIDIA does, like, which is why Japanese bond market, or like, whatever you want to call it, the entire Japanese economy has a very strong influence on what US tech stocks do, because SoftBank has a direct stake in NVIDIA, and that is causing like day-to-day movements to happen in NVIDIA, and that is controlling the NASDAQ index. All right, so if you were to like notice this particular low in 17th of December and this rally which happened, it was because SoftBank rallied over here. And if you notice this high over here on 6th of January, all the way to the downside, that same high was printed in NVIDIA. So it's very clear that this one company is controlling the NASDAQ index because it's controlling NVIDIA. Now, if you know for a fact that there is a pattern in play for this company, which would make it go higher, that would essentially mean that NVIDIA goes higher. That would also mean that NASDAQ goes higher along with it. Now, we have already established the market structure, which is information for NASDAQ. And yes, rightly pointed out, there is this pattern which is going to be confirming in the next day or so, which is the inside 3-week candle failure, which is this one. And I can assure you this pattern is not just present in this company, it is present in a lot of companies. AMD has the same pattern, NVIDIA has the same pattern, Meta has the same pattern, SoftBank has the same pattern, I think Oracle also has the same pattern. So what I'm trying to suggest is that next 3-week candle, which opens next week, with the event of FOMC happening, and this company also reports earnings, which is on 12th of February, it is going to run. It is going to go higher. It is going to go and take out this liquidity over here. And if you want to see what it looks like in mirror image, just compare this thing with AMD. And you'll see what I'm talking about. See this top over here? It was this top in SoftBank over here. This particular price action of the market going sideways, it was also this price action in AMD of market going sideways like this. But AMD has already shown us that it wants to go higher. And it's punching higher, like it has already played out the inside 3-week candle failure. So if AMD is already telling us that it's going to do it, then why wouldn't NVIDIA? Because NVIDIA and AMD are like, the same sectors. Because this particular price action which is present, it is the same price action which is present in NVIDIA as well. And NVIDIA hasn't broken out yet. AMD has. So what exactly is making NVIDIA stay down? It is just one thing, FOMC event, which is next week. And because FOMC event is supposed to make the entire index move, NVIDIA is just waiting out on how the FOMC event is going to go before it starts moving. Because NVIDIA also has its earnings, which is in February, on 25th of February. So it has some time to run. But essentially, this pattern, which has been present, AMD has already given us the green signal that it wants to go. If you compare this thing with SMH, SMH is already like broken out. It's far, far higher from all-time highs. Now, when I compare this thing with NVIDIA, it's quite rare that NVIDIA doesn't rally, but SMH is rallying, because NVIDIA has like the highest stake in SMH. It is the largest company over them. Okay, so from this bottom, you can notice that when NVIDIA has been rallying like this, it's because of that SMH is rallying too. So when SMH is above all-time highs and printing higher highs like this, I can only imagine that NVIDIA is going to follow through. And the only reason it's not following through is because of SoftBank, where SoftBank has not been rallying. Right? Now, this pattern which is being formed in SoftBank, it's a very high probability pattern that it should be punching higher. Now, there's no way I can trade SoftBank directly because it's listed on the Japanese stock exchange. It's not listed on the New York Stock Exchange. But there are correlations which spill over in terms of what's going to happen in the US stock market. And that's giving me indications that going into next week, when you open the new 3-week candle, SoftBank should be punching higher. Now notice that SoftBank actually had a very, very strong push yesterday, which will be confirming that inside 3-week candle failure. That push is not being presented in NVIDIA right now. And my thinking is mostly because of that they want to confirm. Let me just go to NASDAQ. Like they're essentially waiting out for this 2-day candle to close in order to confirm this bullish order block. Because if you were like push NVIDIA, NASDAQ would be like, sitting at 25,800. And that would be like way too big of a 2-day candle. And that's not physically feasible. Like there's only so much movement you can get in like a 2-day candle. And I think this is the max movement you're going to get. They're just going to like, close it right at the tip to make it confirm as a 2-day, even a 2-day candle failure, which is an inside 2-day candle failure. But also a 2-day bullish order block. which is over here. And this is the kind of thing which doesn't break down. Like, I've rarely seen that a 2-day bullish order block would just break down the next day or something like that. Like, that generally speaks that this is a higher low information on a higher time frame chart. And it should be like punching higher for new all-time highs and then beyond. It's not going to stop at all-time highs, because the thing is that the market has been going sideways for 7 weeks now, where the sideways price action started happening from here since November mid. So you could think about the market has been sideways for 78 days. That's more than 2 months, 2.5 months now. So yeah, like when it breaks out and it goes for all-time highs, it's not going to stay there. I think it will generally just push above it and keep pushing higher. But that will be at the heels of NVIDIA pushing higher. Because without NVIDIA, you're not going to get a rally in NASDAQ. Or like Microsoft needs to join the rally with the earnings season coming up for the big tech companies and also for Apple. If these three companies can do like a dead cat bounce because they are like very oversold, then you can definitely anticipate that NASDAQ is going to undergo like a significant push in the market. So these are like major anchors on the market, where the market has been going down for some time now for Apple. Actually, there's a very, very good pattern in play for Apple, where, let me just show you. If you want to be long Apple, this is the time to be long on Apple. The pattern is the double inside 2-day candle. Which is this one. And we know how Apple behaves once this pattern gets printed. Like, we've seen this thing happen on higher time frame charts as well, on the monthly chart in the past. Which is this one. We had double inside monthly candle. And what happened after that? Apple went berserk to the upside as the consolidation broke out. Now, same thing applies on daily chart as well. Now, in this particular case, it's not going to just sit over here. I would say that it at the minimum, it should be going to 265. Test this SR flip. This was the prior support zone, which the market broke. So I think it should be going till there. But Apple has earnings next week, so there will be some whipsaw. If you want to take a trade in Apple, you need to buy time behind it, at least 2 months worth of time for that options trade if you want to like engage with options. Another thing which you need to be paying attention to Apple is that one of the reasons it's coming down is to fill this open gap over here on the 3-week chart. And I discussed this thing in great detail on how markets love these open gaps on any higher time frame chart. If there is a wick which does not fill the previous up candle and leaves like this open space, and the market's like returning to fill that open space, expect a very severe reaction to happen in the market moving forward. And we saw that thing happen actually in Dow Jones, which is this one. See this level which I've drawn out? It's not from coincidence that this level is sitting there. That is present on, yeah, right here. So there was an open gap present on Dow Jones Cash Index. Market went through a severe gap down, filled that open gap. What happens after that? Massive reaction to the upside, almost hitting at all-time highs. That is the same thing which Apple's going to go through, because Apple, just like any other large tech company, is extremely controlled by index algorithms. And if the index can go through like a severe reversal like this, then so can Apple. All right, and we're getting an extreme consolidation happening right after it's filling this gap over here. So I wouldn't be surprised if next week you get a very severe reversal to the upside for Apple. And also, Apple has earnings next week, so that is also something to keep in mind. Right, so that's for Apple. Then, but anyways, like what I just discussed for Nasdaq's price action on why exactly it should be breaking higher, how exactly is the market returning, how it's being influenced by SoftBank, how SoftBank has a very bullish pattern in play, that will spill over into NVIDIA, and how that's going to spill over into Nasdaq. Is everything clear? Like, because this is one of the reasons I was wanting to do this live stream, because I could not explain this thing over text. If there are any questions, this will be the time to ask it before I move forward with any of the charts. Very nice. Okay. So how would you profit from this? Like if you were to like open any long positions, because S&P 500 is already trading at all-time highs, Nasdaq is not. So there is a trade to be taken over here. The trade could be in triple Qs, where triple Qs have still not printed an all-time high, and they most definitely will open an all-time high. So if you want to take a long position, I would highly be speculative with this thing. You could take February ends option calls on triple Q, which is this one, and go for all-time high top. Just all-time high, that is. I think 640 would be the one to do. Just this one. It's trading at 6.40 right now. If it goes in the money, it will be trading at roughly 15. That should be giving you 120 to 130% return on that investment, given that this thesis plays out, where the next 3-week candle turns out to be bullish because of what's going to happen with SoftBank and NVIDIA and how the rollover effect is going to come to play. Okay, so that's one way to do it. If you want to just enter a long position in futures, what I would do is wait for the new 3-week candle to come, because timing futures is hard. It's not something which can be done easily. And I personally wanted to wait for the market to come down to the yearly open, like come down to tap this level. Is it going to do it? I don't know. But what I'm going to do is I'm going to wait for Monday, let the 3-week candle close. If it confirms as an inside 3-week candle failure, which it most definitely will, then you know for a fact that you're positioning for the next 3-week candle to the upside. And the next 3-week candle's expansion is likely not going to start until FOMC is done with. So you can use Monday's candle, which forms, and if there's any stop run happening from Monday to the downside, you will essentially be positioning for the downside wick, which will be forming once the new 3-week candle opens. Okay? Because every 3-week candle will have a wick to the downside. It's not like, they're just going to go from the open and never come back. Like every 3-week candle, as you can see, they all have wicks, which is like, some have like very, very giant wicks. And if they just go without a wick, I would be heavily surprised. Like, I don't think it's going to happen. So you could simply wait out this 3-week candle close and position long for the next 3-week candle. Because guess what? If this is an inside 3-week candle failure, then we know for a fact that this 3-week candle is not going to break. Like, this will be your stop loss. That's how I was framing the trade setup over here as well, when I mentioned that this bullish order block should not be broken down, which means that the low of this bullish order block will be your stop loss, right? Now, if the market does not want to come down, that's fine, but that does not change the fact that this is going to be a stop loss. It's just going to be a wider one, and the target is going to be the all-time highs, but I don't think it's going to be at all-time highs. You should definitely be targeting above all-time highs. So at the minimum, 27,000. 27,000 is where it's going to go for NASDAQ. So let's say if you were to like not be patient enough and you just want to enter a long position right now, up till all time is a 1 risk reward ratio, not that great. Goes to the second target, that's a 2 risk reward ratio. But if you were to wait for, let's say, Monday and the market undergoes some retracement and it comes down till here, that will make it 1.7 risk reward ratio to all-time high top and 3 risk reward ratio to the first target at 27,000. Okay, but I would personally wait till Monday because I want to see how the 3-week candle closes. Like, this consolidation hasn't been kind to me, that anytime it bangs into this level where the market, like, you know, tests this level, it undergoes a pullback. So I'm not going to like re-enter again into the resistance, like seeing what has happened in the past. If there's a down day between now till FOMC, I will utilize the down day to enter a long position in NASDAQ and position for the next 3-week candle to the upside. That's how I would approach it on the futures chart. Okay. Any other questions before we move on? Yeah, I've checked MAGs on monthly. There's an inside monthly candle in play for MAGs. And it did not take out the low. It's a naughty little thing that I would have like entered long right there. It just does not want to go down over there. And you know why MAGs is going higher like this? It's because of Meta. Meta basically did a U-turn and it's going higher. So let's see what Meta is doing, because Meta, you know, people love to hate on this thing. And I think I've discussed this thing in the past as well, that Meta has a bullish market structure, even though, you know, most would not want to believe it. It is bullish market structure where we have been trading above this 3-week bullish auto block. Use the same concept that I just talked about NASDAQ for market structure. This is the most recent higher low. We know this is a higher low. Why? Because it went up and it took out the previous high and made an all-time high, which means that when you're pulling back into the territory of this 3-week bullish order block, which is a support zone. The market actually provided you a reaction from that support zone. Now that reaction may not have shifted the market structure yet, but what it has actually done, now this wick is not valid. You should not be using that wick as your reference point. The reference point should be this lower high candle over here. So if the market is actually making lower highs, but it is failing to make lower lows, it is just a consolidation. It's not bearish, it's not bullish, it's just a consolidation. Now this consolidation likely is turning into bullish market structure because we are mostly coming to a point I'm gonna redraw that. Okay. So we are coming to a point where if market trades above this lower high at 676, then you will be facing with a shift in market structure back to the bullish side, where this would become the low. This is the lower high, a higher low, but the higher low would be getting confirmed as a higher low once the market takes out the nearest lower high. So then this will be the higher low with respect to this higher low, if and only if you go above this lower high over here at 676. But do we know it's going to go above the lower high? Yes, we do. How do we know that? Because of this pattern information, where we had, let's say, this over here. Okay. If this closes as an inside 3-week candle failure, that is essentially telling me that the next 3-week candle wants to go to the upside. Okay. And if it goes to the upside and it trades above 676, then it is daily bullish market structure in play. And if that is daily bullish market structure in play, what exactly happens next? It goes with this high, and then this high, and then this high, and then this high. Once it turns bullish, that is. And isn't it convenient that it is turning bullish right ahead of earnings, which is happening next week? So the technical setup is actually bullish for Meta going into earnings based on this inside 3-week candle failure. Now, will my thesis change if this thing drops into the support zone? You know, it actually won't. That's the irony part of it. Like, we might be tracking the shift in market structure right now, that it might be creating a like a higher low. Even if it were to come down, it would still be trading above this major higher low, right? So as long as it's trading above this support zone, it is still technically in the process of making a higher low. And I cannot just short into a support zone, even though if the market is coming down into the support zone, that's not exactly what I do. Like, what I would want to see is that if the market creates a higher base in a support zone, I want to go long on that, because the market structure is actually bullish. It's not actually bearish, right? It's undergoing a pullback in terms of, like, you know, creating a higher low. But once the pullback is over, that's what trends do, where they unfold to the upside once the higher low has been printed. So ever since this trend has been in formation from this bottom, so this was the last major low, then a higher low, next higher low, next higher low, higher low, went through this entire rally, pull back, another higher low, rally, pull back, higher low. So if you're printing higher lows, higher lows, higher lows, why would you want to short something which has been printing higher lows? At least wait for the market to break the higher low to the downside, give you a proper market structure break on higher time frame, then try to think about shorting the market. So I would not be like wanting to short an asset which is actually in the process of forming a higher low on the weekly chart, or the daily chart for that matter, that is. Okay, so that's for Meta. Other companies which I've been paying attention to, I mean, TE looks pretty good. Where, I mean, I'm already long on it from like October. I'm still holding that position. I'm not gonna close it. Like, it's a 10 bagger for me, where I just want to be holding that long position until it like reaches 17 or like beyond that. Like, it's not gonna change for me for now, because the AI revolution is very real, and energy is definitely gonna be a bottleneck for that. So I need to be long specifically for that. There's this company which is coming on my radar now, Shopify, because we have an inside monthly candle, and it is actually breaking the inside monthly candle lows. So if it provides you any long, like, you know, if you want to have a blind long entry, this would be a great area to have it. This region, that is untested support region on the weekly chart. And if it were to come down over here, I think that would be pretty good. You know, this chart pattern reminds me of Costco, where I was writing heavily on how Costco's gonna go. And Costco had the same setup in play, which was this inside quarterly candle. Now, notice that Costco had the setup in 3-month chart, came down and is rejecting, going higher. Shopify has that setup on the monthly chart. Well, not on the monthly chart, you can see like the weekly chart. What exactly is that setup over here? It is this region, which acted as a support zone. And even though, you know, it was going through like a sharp downtrend, Costco that is, once it tapped into the support zone, notice how the reaction came in. Like, it's a very, very strong reaction. And what exactly was forming before this reaction came in? It's a double inside weekly candle. And we know what that provides you. I think you've seen these patterns way too many times to know what happens after that. That the moment you get double inside candle in any time frame, whether it's a daily chart, whether it's the weekly chart, whether it's the monthly chart, you will see a massive expansion happening from there. I just posted that pattern for Apple, which is over here on the daily chart, the double inside daily candle. Costco gave you that same pattern at the bottom. It's looking very similar, I would say, yeah. We saw the same pattern in gold as well before it broke out. Make sure I point out towards what I'm looking at in gold, like when gold did break out in the past. Here you go. Double inside 2 month candle. What is happening since then? The market has been just going bonkers on the 2 month chart, that is. Like, this is the highest of the highest time frames. So whenever you see this pattern, just go long. Like, it is one of those special moments you can have when you spot this pattern in any asset class, that you just have to think about going long on that pattern. All right, so Shopify is, where is Shopify? Yeah, it's coming down for now. I will wait for it to come down till 129. At 129 it becomes very lucrative because that's a very, very strong SR level. Like, it dates back to December 2020. Right, once it gets in here, the risk reward ratio becomes extremely good for entering a long position, and you can navigate the long position like this, where the entry would be at 128.52. Well, you could just say 129. Stop would actually go below. See this little bit of a small candle? It will go below 112. And you can hold this long position to all-time highs. That's a 3.44 risk reward ratio on Shopify. Alright, so that's something to keep in mind. Thoughts on SEI? Yeah, I think it should go higher. There's no reason not to. At the moment, it's just waiting for this 3-week candle to close. It's the same candle which I just discussed for Apple, right? It's on the 3-week chart and it's breaking to the upside. So it's just wanted to close the 3-week candle out, in my opinion. Once that is done, should likely start expanding higher. What I would tell you is that if you are long on SEI, your stop loss should be at 49.72. It should not go below this 3-week candle low anymore because it is actually broken out. And if it falls below and it takes out this low, then you're triggering an inside 3-week candle failure. In that case, it will go for the downside equity over here at 38.42. Okay, so currently, yes, it is in breakout mode, and we should keep it that way. And I think I discussed this setup in AXSM as well. In the beginning of the week, I posted the setup over here. Like, this is a double inside weekly candle consolidation. And that consolidation broke out at the upside as well. If it took the straight setup, should be good. Should have provided a decent bit of a push. Nothing has changed on JPM, Minkus. It's just trying to find a bottom for now, where the volatility is somewhat making it whipsaw a bit based on what's happening with the geopolitical stuff, but it's not out of the woods yet. Like, what I mean by that is, we have 1 week remaining on this monthly candle to close. Ever since this bottom, the market has never breached any of the higher lows of the monthly chart. And I don't expect it to breach this one either. If it were to breach this one, I think that would be an issue. And at that point, I will have to like pay attention to what's happening over here. But I'm willing to give it the benefit of the doubt that it may just be a stopper if it were like go below here, because the other swing lows are like sitting right down below over there. I would much rather want to see that if it goes below 295, that would be an issue. But yeah, I think it's just wanting to find a bottom. It's in the process of doing so for now. It may take another week for it to like fully confirm a bottom. It's not fully confirmed yet. Like the bottom will be confirmed once it goes above 317. So I'm just waiting on that. Like it may go sideways for a few more days before like makes a proper attempt. But it doesn't quite change the fact that there are severe inefficiencies sitting up top. And even though the market has come down, it is trading within a weekly support zone, which is over here. This one. So you would have to go below this low at 292.81 in order for it to like turn bearish. If it's trading within this weekly support zone, there's not much I can do. Like this support zone has been holding the market for a very long time. And in the process of doing so, it's making higher highs as it goes. So if it's a pullback for now, I'm thinking that this is just a higher low. And next week I would want to see it punch above 310. And then week after that for February and second week of February, full on rally to all-time highs. Like that's generally how the market structure unfolds in JPM. It may look heavy in the moment, but it doesn't take long for it to start catching up steam and start running higher. Another thing I'm going to mention about JPM, look at every other bank on how they are forming their monthly candles. This is GS and this is JPM. So essentially from this bottom, you see the stop run over here? It was the stop run. So once the stop run was done, they both have been just expanding in a straight line without the previous month's low being taken out. If GS did not take out previous month's low, I don't think JPM is going to start doing it right now. All right, so this makes it a very, very high risk reward ratio, because if you're thinking that the previous month's low is not going to get breached, kind of like this, and you're going to go back to all-time highs, that's a 5.12 risk reward ratio. Essentially, like, you know, what I'm saying is that it's going to play catch up. And JPM had, like, you know, just company specific headlines with the Trump administration. But when I'm looking at every chart out there, except Bank of America, that's the same one as JPM. XLF is very heavy on JPM, so if JPM is down in the month, XLF will also suffer like a down monthly candle. This is just sideways for now. Wells Fargo is the same as JPM. Morgan Stanley is the same pattern in play, where you're just like trading the stop losses on the monthly chart as it goes higher. Charles Schwab, you can see the monthly candle is actually closing pretty decent, even though it had volatility due to whatever was happening this week with the big banks. But Charles Schwab is very, very tightly correlated to what JPM does. So we had mentioned that there is this pattern in play for Charles Schwab, which was this. Like a bull pennant. And it's just warming up. I don't think it's going to stop at the moment. It should keep pushing higher for Schwab, that is. And if Charles Schwab keeps pushing higher, then that actually means that JPM should be pushing higher as well along with that. It just needs more time to form like a base before it like starts rallying higher again. Because what I can say is that if you were to compare every major inflection point in the market, like if you were to like see this high, which is this high over here, if you see this high, that's this high over here. And if you were like notice this high, that was this high over here. Charles Schwab has already recovered the drawdown and punching above all-time highs. So my thinking is that JPM's algorithm is going to catch up and print a new all-time high on JPM as well. It's just in the moment of like creating a higher low, that's all. And one of the reasons I'm holding JPM is because of XLF. That we know for certain XLF is going to go up and target this open gap over here, which is this one. And that open gap is sitting on the weekly chart, right? It's going to happen very quickly. And when it does that, who do you think is going to be driving XLF? It will be JPM. Because that open gap is sitting over there because of JPM. Like other banks are still rallying and XLF is down because JPM went down. So if we're thinking that XLF is going to go and fill that open gap over here, that will be happening mainly because of JPM. All right, so I've seen this thing very, very often in the market, especially for XLF and JPM, that they both move hand in hand. Like there's no way that XLF goes higher, but JPM doesn't go higher. Like you'll have like some random news headline come in and JPM will be like up, will be up like at least 2-3%, and XLF will be up like 10%, like 1%. Mainly because of that inefficiency sitting over there. That's what is going to be gravitating the market to the upside. And if you were like to compare the price action on both JPM and XLF, they have like very, very identical price action. So if you were to like pay attention to this consolidation over here, that consolidation is this consolidation. You could possibly say this. All right. So you can see that XLF is pretty much a carbon copy of what JPM is doing. Like this entire rally which happened in XLF was this rally in JPM. So if it came down, is XLF coming down is because JPM came down. And if XLF is going to go for this open gap fill over here, that means that JPM should be trading at 328 to 329. Okay, so that has been like my long-standing target, like the first target where JPM should be going till. And that's not going to change anytime soon. I think it's going to be hit February 1st or 2nd week. It's not going to be next week, which is one of the reasons I have time behind my option contracts for JPM, that is, which I'm still holding for now. Yeah, but like, nothing has changed in the banking industry. Like they're all doing well. If you were to like notice the community banks, which is KRE, this is the ETF for smaller community banks. They don't have any credit risk. Like these are not the banks which give up credit cards. They basically give loans to like local communities in US. They have been going bonkers. Like if you look at the monthly candle on the community banks ETF, which is KRE, that's up heavily this month. That goes to show that the entire premise of deregulation, which I had discussed in the quarterly outlook stream, in the Q1 quarterly outlook stream, that is very much in play. Like deregulation benefits small banks, and small banks are present in KRE. If you want to find out which companies are present in KRE, like the big ones, you can go here and just search out which companies are present in KRE ETF. Provide a list based on weightage. When it comes out, just pop in AI mode like that, and you can make a list of those companies which are present in the KRE ETF. Right, top 10 companies. Let's see. So these are the ones. So as of January 21st, top 10 companies in the SPDR Regional Banking ETF KRE based on weight are as follows: CFR, BPOP, CFG. Let's see how the charts look like for that. So CFR. Yeah. See the monthly candle in this one? Which is one of the reasons why KRE is behaving the way it is. I'm not saying that you need to be like longing this one. If you spot a setup which is good, I mean, yeah, the setup is good. Most can definitely see this inside quarterly candle failure, which is expanding to the upside. So 147 is within the reach for this one. What is the next one? BPOP. Oh, that's a good company actually. Like, it's looking like Citibank, where Citibank was up heavily on yeah, this is consolidating for now. It should be punching higher. It looks like it should be punching higher. One of the reasons I'm pointing towards this list is you need to be making these lists yourself. I can provide you the framework on which sectors will do well based on the monetary policies which are being set. And we discussed in the quarterly outlook stream that the regional banking sector will be doing well because of deregulation which is happening. And these companies will benefit. Like, it's up to you to go and find out which companies that there's going to be and spot out the chart patterns in them. Like, I'm looking at these companies for the first time, but I generally, what I do is I track the regional banking ETF. And that broke out definitely this week. And it's not going to stop here. I would say that it's likely going to 78. And another sector which is breaking out is the space sector. The ETF for that is UFO, where you can see that this is definitely punching. It's not stopping anytime soon. And it has a very, very good pattern in play, which is the inside weekly candle. Whenever you get something like this, where the market is going higher in a straight line and you undergo a consolidation, one of the two things is happening. Either it's just waiting out this candle to close because this is so far gone that the market does not want to undergo a pullback, but it does not want to push further higher either because look at the size. The size is like extremely stretched. So what it's doing, it's waiting out the close of this 3-week candle, and once the new 3-week candle opens, the expansion can resume again and it's going to keep punching higher again. Okay, so this pattern is definitely going to break out and it should be punching higher, further higher. And this is one of the ETFs which has been on tier. It will be on tier going till like summer because SpaceX is going to be doing their IPO, and that I'm going to do like a special report where I'll be like making a list of companies which will benefit the most from SpaceX IPO. And this sector, which is the space sector, the ETF for that being UFO, will be one of the hottest sectors this year. And I just want to like bring it on your radar that this is something which you need to be paying attention to as well. Just like how we discussed that we made a list of energy companies. If you were to like look at how these energy companies are done in the quarterly outlook, they have been doing phenomenally well. Like BE, when I discussed this at the yearly open, it's up 80% from the time when I hosted the quarterly outlook stream. If you were to look at SkyT, that's up 82% since the time we discussed the breakout which would be happening from this 2.5-year consolidation. It's not going to stop anytime soon, but I'm just saying that when a sector becomes hot, it doesn't give you much of a entry. It just goes like it will just go like a bazooka. And that's what we saw with the energy sector for any of the companies which are providing energy to AI data centers, that is. Lunar is just getting ready. This company may be also serving the energy sector, but it is also like serving SpaceX indirectly by providing parts. Okay, so I would definitely be positioned for this one, where it is both in the aerospace and defense sector. So with the SpaceX IPO, I think it should be benefiting quite well for Lunar, that is. I came across another company which no, I will have to find the name for that one. I'm missing out on the name. But yeah, that is another beneficiary of the space sector, which I'm gonna include in my report when I discuss that. This one it's not a, I mean, it's a pharmaceutical company, but it had a good setup, so I just added it over there. This is another energy company. It's been doing fine. Nothing is wrong with it. It's just slow a bit in terms of like how it moves. This one came down. All right. If it's down, then this is an opportunity to actually go along. But I would much rather be present in the momentum names, which have been going forward. Yeah. So this sector has been doing well, like the energy sector, that is. You're mentioning ATST. What is that? ATST is not a company. That's a sales tax rate in Austria. Your T is up 13% on the day. Great. Oh, is it now? Hood? Getting there, yeah. Almost getting there. So the chart pattern in play for Hood is the inside 2-month candle, and we discussed this thing during the quarterly outlook stream. Once it sweeps the lows of the inside 2-month candle, we'll have ourselves a proper chart pattern in play. Thoughts on RDW? Let's see. I think that was the company I was looking at. Yeah, this was the one. Redwire Corporation. This is going to be the beneficiary for the... Yeah, thank you for bringing that up. I was looking into this company myself, where one of the reasons I have this lineup is what I noticed between January 2024 and January 2025, it went through an 800% run up, 900% run up, and it then spent the entire 2025 going through a pullback. Now, with the SpaceX IPO coming, this should actually be trading at 25. It should be at all-time highs, but it's being presented to you at a 50% discount. So I will be positioning into this company as well, and it has the most beautiful chart pattern in play, which is likely visible on the yearly chart or 3-month chart. Yeah, 3-month chart, which is this one. It should be going to 22, for sure. It's got to do that. Once it goes to 22, it's not going to stop there. It will go to 26 after that. So all-time highs are likely baked in with this pattern in play, and it has already triggered long, which means that's another 120% return on that. If you want to position in it right now, go ahead and do it. Like, for the people who have attended the stream, this is like a prelude to the space sector report, which I'm going to be pointing towards, and I'm going to be pointing that I will be positioning this company. Yeah, it'll be doing well. So you definitely want to hold this thing for the next 8 to 10 months. So SpaceX IPO will likely be bringing a lot of capital into the sector. Now, you know why the SpaceX IPO is causing pumps momentum? It's because of Elon Musk. He's the master pumper. Like, he goes on Twitter and he starts hyping up the evaluations. He's talking about how SpaceX IPO is going to be like, the largest IPO ever. It will be about $1 trillion worth of IPO in valuation. So if there's so much money coming into this company, then why won't these companies go higher, which are directly or indirectly supplying parts to SpaceX or NASA, when we know for a fact that that sector will see so much revenue come into play once these companies go public, which is why that sector is catching so much steam because of SpaceX. And you also have to think about it from a defense perspective. Like, what exactly has happened in the past year? You've noticed the advent of drone technology, where with the warfare which has been happening, like one of the companies, Anduril Industries, it is one of the hottest defense companies out there right now, which, like, you know, when most people look at PLTR, they kind of cringe. Why do you think PLTR is trading at such higher multiples? It is mostly a defense company, like the software technology which they develop is for drone technology which they provide. And if this company is behaving like this, why is it behaving like this? It's because of the applications of the software and defense technology, right? So you have to think about anything which has to do with aerodynamics for defense sector now. And when SpaceX is doing the IPO, they're actually saying that all that capital will be flowing into developing new parts, new services, new components for the defense sector as a whole. And whichever company is listed on the stock exchange which provides these parts for SpaceX or NASA or any other defense sectors, they become hot. And that is one of the reasons why this sector is like catching so much steam and so much capital is going behind it. Because they saw what happened with PLTR and they don't want to mess what happened with PLTR with other companies, that is. And it becomes like a self-fulfilling mechanism on how the market kind of unfolds. All right, hopefully that kind of answers the question. Why exactly is SpaceX IPO causing so much hype? You know, looking at PLTR, that's a pattern play as well, which is inside monthly candle, and we're just taking out of those. Is it gonna stop here? Yeah, I think so. If you want, you can actually entertain a long position on PLTR. Main reason being that I took at this lower high right there. If you want to entertain a long position on PLTR, this is how I would do it. Where the stop would go below this particular low. And the target will be this open gap fill over here, up top. That's a 4.55 risk-reward ratio. Okay. There's also inside 2-week candle failure, potentially information, which is this one. So the stop which I'm pointing towards is below this thrust candle's low. Yeah, it actually could be a good setup. Where I'm thinking it might turn into a triangle. Could notice it like this. Punches higher again, then goes sideways a bit, and then breaks out of this triangle. That's definitely in play. See, it goes back into the same mentality on what market structure is for PLTR. This is the market structure right now. Where the market has been punching higher, you see how the market took out the previous high, made a higher high. So there's pullback. This is a higher low with respect to this higher low. And when this punch higher happened, it actually traded above the nearest lower high, which created a higher high. Well, technically not a higher high yet. But what it's telling me is that it should not go below this low. And when this pullback is happening, you have to anticipate that it will create a higher low with respect to this higher low, somewhere around here. And that's why I'm using this pattern, which is the inside 2-week candle failure. Potentially a failure. It's not a failure right now. We still have one more week left. So I'm thinking the next week it basically trades above and trades within the inside 2-week candle range. That would cause a failure to be in formation. But if you want a better risk-reward ratio, I think this is where you get the better risk-reward ratio for the market. But I'm personally not looking to trade this one. My thinking would be that NASDAQ has a much better risk-reward ratio. Apple has a much better risk-reward ratio. Meta has a much better risk-reward ratio. Yeah, so PLTR, it's trapped for now. But then again, most companies have been trapped. And it's a matter of like resolving their consolidations. And if you're seeing a specific pattern which could resolve that consolidation, you need to execute on those patterns. That's pretty much it. Like when Meta confirms this failure, that's a pattern which is being triggered. You have to execute on the pattern. When NASDAQ closes, this 3-week candle, that would be a pattern being triggered as well. Even though, you know, we're discussing that, well, it took other upside liquidity and it went down, but it never actually is looking to close down. It rated the downside liquidity, but it's closing as a bullish candle. So it has neutralized both sides of liquidity, which is essentially what happens in a consolidation. But since it's in an uptrend, and we discussed that in great detail in the beginning of the stream on how it's in an uptrend, my bias would be that it resolves to the upside once the catalyst events are underway. Google, yeah, Google should keep pushing. There's no way it should not push. This quarterly candle is likely going to turn bullish as well. It's just that you are talking about a $4 trillion company now. Like there's only so much upside there can be in Google until like, you know, it really just hits its capacity that it cannot just push further higher until like, you know, the Fed does quantitative easing and there's more money pouring into the system. It's the same kind of an effect which NVIDIA is facing with right now. Like, take into account every narrative which is going to NVIDIA that, you know, their valuation is capped or their GPUs are no longer useful because they have a time cycle of like 1 year. Like that is the most ridiculous thing I've heard, that just because they have to update their GPUs every year. What do you think Apple does? Apple launches an iPhone every year and people go buy it. Which means that when NVIDIA launches a GPU every year, companies are going to go buy it. Like, just to claim that the company does not have much growth left because their life cycle of the product is only 1 year, I would recommend looking back into history and look at every other company which has been present since 1980s. All of their products, they go through like a renewal cycle every year, but they make better products every year and companies want it. People want it because they are state of the art. Like there's no competition out there in comparison. So I would say NVIDIA would enter this kind of a phase where whatever revenue they generate with the new product which they launch, they would just provide that revenue to other companies which are up and coming and do like investments. Like they can become like, it could become like vendor financing, which used to happen quite a bit back in the tech bubble. And NVIDIA can be like a source of how the bubble starts fueling even more. I'm not going to go into the whole specific part of it. Like I've seen this thing happen a few times where instead of doing share buybacks, companies can just like, you know, use that revenue to invest in other companies, which can benefit a lot because they're smaller companies, they're startups, but they're like actually actively involved in the space itself. And it would help NVIDIA's business as well if those companies do well because they are serving like a bottleneck effect. Like they're going to invest in companies which fix NVIDIA's bottleneck is what I'm thinking they're going to do. because there's only so many more GPUs they can sell. Like once everybody has their GPU, they will just have to like wait for the next GPU to come out for the next year. So in the meantime, nobody would be like, wanting to purchase NVIDIA's GPU until like the new product launch happens the next year, that is. But it doesn't mean the stock is gonna stop going higher. I would say that it would still go higher. It's just that it won't go higher at the same expedited pace as it went through, let's say, in 2023 and 2024. That particular phase is mostly over for NVIDIA. It will still keep going higher, but at a smaller pace because it's the largest company now. It has $4.5 trillion valuation. Can it get to like $5 trillion valuation? Yeah, definitely. But to think that it's going to go from $5 trillion to $10 trillion within 1 year, that's, in my opinion, very absurd. Like, I don't think there's that kind of money sitting around which can just pump it to like $10 trillion worth of valuation, which would mean that NVIDIA goes like at least 300 something. No, not something like that. But it would mean that, index is controlled by NVIDIA, so it would become like this is what happens when a company becomes too big. It just goes sideways in a range for a very long time until like some kind of a new stimulus event comes in where like either the government is providing you with like stimulus checks, which makes the company go higher, or you have like a product launch which happens like once a year, which would make the company go higher. In between, you do nada. You just go sideways. Because if you look at NVIDIA, it's basically sitting at the same level where it was at like back in August. So since August till January, you're talking about 5 months, which the market has not done anything for 5 months. And it doesn't make it bearish. I'm just saying that the upside is not there as much in comparison to other companies out there. Yeah, most participants are at the maximal low risk, yeah. So they're basically like reaping the benefits of those risks and recycling the profits into other companies, and we'll see what happens. But anyways, I think I've covered my major thoughts in the markets on what the market should be doing going into next week. We will still meet on Sunday and I'll discuss the game plan for the coming week based on how the weekly and the 3-week candles close. So hopefully that provided some clarity in terms of why I shifted my bias from bearish to bullish on NASDAQ based on the market structure shift in the beginning of the stream. Any questions before we wrap up, guys? I think we've done quite a lot in the stream. I was not expecting the stream to go on for this long. Oh, you're welcome, guys. Hopefully you found value in it. So, Plank, for Forex, I will have to do a specific stream for that. I would think that I will do Forex on Sunday, where it's been long overdue on my list. And if I start talking about Forex, it will take another 1 hour. That what happened this week with, let's say, with Euro and GBP/USD. This is most definitely a setup for expansion of the upside, and Forex would most likely look to expand to the upside. I will cover those setups on Sunday. I don't think there's much I can do right now. Instead, I'm going to just wait to see how these candles are going to close for 3-week short and the weekly short. GBP actually played well. I discussed the setup where it provided the inside tool our candle play. It took out the downside liquidity, punched up and took out the upside liquidity. But yeah, I'll cover Forex on Sunday. Until then, take care, guys. I will see you soon. Enjoy.